Hi, Dan.
Good morning, Trevor.
Okay, Dan.
Yes, I'm just going to make you the presenter now. Make presenter, yes. Okay, you should be able to show your screen. Yes.
Okay.
We're looking at Euro USD weekly.
Okay, very good. I'm ready to go when you are.
Okay, well, I make it 8:59, Trevor, so we don't want to jump the gun. We don't want to jump the gun too much. We've got another minute yet, I suppose, and I can see we've got the rotation. Yeah, put our feet up for a minute. Why not? We put the kettle on. Okay, I make it 9 o'clock, Trevor. I think it's safe to say that we can get started.
Okay.
Okay, hello everyone, and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get everything done in approximately 30 minutes. If you have any questions for Trevor, please ask them in the questions tab of the GoToWebinar control panel, and I'll pass those on to him. We'd just like to remind you that this webinar is actually posted to our YouTube channel in a couple of hours' time. So if you'd like to watch it again, you can do so there, and we'd also love it if you subscribe to our channel and click on the bell to get notified. The handouts for today's webinars, there are two of them actually. They're in the GoToWebinar control panel, which says handouts on the little tab. You can download them from there, and if you're having any problems, let me know and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor's talking about when he's doing the webinar, and the second is a CFD guide, which is a fascinating document describing all the different products we offer at FX Choice. If you're watching this on YouTube, as many of you do, these handouts are available in the description box. I'm sure you all know Trevor by now, but for those of you who don't, he has over 40 years experience as a technical analyst and trader. He's been trading since 1976 or 1974 even. So without further ado, Trevor, take it away. It's all yours.
Okay, thanks, Dan, very much. Yes, so let's have, before we go into the currencies, we're dominated by the weak US dollar, and you can see this here on the relative rotation graphs here. Vertical line at 100, everything to the right of the vertical line is outperforming the US dollar on a relative basis, and everything which is above 100 on the horizontal axis is with positive momentum. So for example here, Norwegian crown, we're on the right, not quite as far as the Swedish krona, but far to the right here and pointing upwards, which means it's outperforming with positive momentum. That's the interpretation of it, and the further away you are, the stronger that message is. So we've got absolutely everything in this top quadrant here. It's very unusual. So you being long of anything versus the dollar, virtually except for the Canadian dollar, is the best thing to do. So if we just look quickly at these, we mentioned about Swiss franc last week. Here's the Norwegian crown here. Here's the Swedish krona here. This is by the way Friday, Thursday, Wednesday, etc. That's the trail that we've made, and this is trading upwards in both senses. So that's from a relative point of view, it's a strong currency. Euro here, New Zealand dollar there, Japanese yen, Australian dollar, pound right back in here. So trailing, so given choice, you'd be better off with other things than the pound and the Canadian dollar right over here. These are the G10 currencies, of course. So let's have a look now. Euro, remember where that was, not as far over as the Norwegian crown, but strong. So we've got the weekly chart here, just to remind ourselves. We had the bearish divergence, which forewarned us that we were in a frothy state. We've had a really big pullback in the first quarter of the year, and then bouncing from it now, where we picked up this significant area of support. So it was rather predictable where that happened. There was the bearish divergence, and it's still intact at the moment, so watch out for that. On the daily chart, it's moved up, of course, with this dollar weakness here. Now we've got a bullish divergence, which warned us that this low was overextended. We low, lower low, low, higher low, and then broken up here in the RSI, and now pushed up ever since then, powering ahead. It's a high reading. Yes, it is a high reading. It's extended. We've come into some resistance. That's sort of potentially we could ease back from here as a result of that. But don't forget, the message here is strong. MACD is up. The ADX is at 28, and just note that we're at 28 on the ADX, so that's a relatively good reading, and it is pointing up, and the RSI is looking good too. So I think that you know, breaking through the 120 level was significant. I think it is looking good. There is resistance above, so it's not a easy journey onwards, but it does look as though it's going to go higher. Let's look at sterling next. Remember where that was, lagging behind the euro and other currencies. So on the weekly chart, first of all, the MACD here is still negative. So this is not showing in a weekly perspective as bullish yet. The RSI is coming up. It has met support and held, and we've still got this pattern of rising lows, which is constructive, and so we should go higher. 140 is resistance for it, but it's not as strong a picture as we've got on the euro, which was really displayed to us on the RRG chart. Here we had the down channel. Here we broke out of it powerfully, pulled back, retested it in the last days of last week, started to improve a bit here and look a bit better. Technically, it's bounced at this 137 level, and it's got this support from the January consolidation over here. I think an advance is starting, but again, there's resistance at 140 and 142. And the resistance at those levels is not particularly strong, but this again is not the best one to be in if you're choosing where to get your bang for your buck, if you like, literally against the dollar itself. Let's look at the pound versus the euro, and then also I'm going to today look at the pound versus the yen. That's a request. Thank you very much, and please ask any questions you have as we go along. I love the interaction. I'm not here to make a lecture. Please, you know, ask anything you want, technical, that is. Where's the nearest Sainsbury's? I don't know. But here we got the Euro GBP on the weekly chart of that. We came back hard from here when we hit that resistance level there that we knew was going to be trouble for it, that big double top back in 2020. We hit the resistance at 118, came back hard, and now the MACD has finally crossed on that to the downside, and we are moving down in that. So we've got a pattern of lower highs. We've just broken this low here, so technically this is bearish now. We had a great run on it, but it's over really, that particular play. The GBP Japanese yen, which was a request here. Let me first go to the weekly as always. The MACD is threatening to cross here, so it's looking a bit like GBP euro. The RSI has crossed down here, and so this great run here that started back in October looks to have come to an end. The daily chart here, we've got also a high, then a lower high, and the question is, have we broken this low yet? Which we have done in the GBP euro, we haven't yet done in the yen. We were warned about this toppy action through the bearish divergence, high, higher high, high, lower high here, and the bearish divergence is still intact here. We've still got this lower high pattern, so I'm going to extend this to the right. It's breaking that, which would indicate that the pressure is off. So the pressure is still on this. Some very important support levels, this low of 149, and just below it here 148.50. If those two levels go, then we're very vulnerable to moving much lower. Hasn't happened yet, but basically the game, which was to be long the pound versus the yen, I would say is over.
Trevor, can you hear me?
Yes.
I just got a question for you from Gregory Amos. Thanks for your question, Gregory. He asks, can we take a look at the Mexican peso before we move away from currencies?
Yes, okay, I will do that. I'll do that one the last. I wanted to
Okay.
just look at the Norwegian crown, and then I'll do the Mexican peso.
Thank you.
So Norwegian crown. So remember where that was. We had the Swedish krona, but I like the Norwegian crown more because it's also got an upward thrust in it, which is increasing positive momentum is the message. We've got a very big pattern here that I wanted to draw your attention to. I'm going to go back 10 years here to show you what I'm talking about. So here's where we are now, breaking down. It's a minor breakdown, but it's a major breakdown as well. So we're breaking down through all these support levels here have been cleared. These support levels here have been cleared. The next target really is just above 8, the big round number of 8. And it's really looking awful. And this is a very big sort of topping pattern there for the dollar. Don't forget this is dollar weakness and NOK strength. So let me just put that back to a more reasonable period, which so I don't get messed up for my next chart. And then there it was. There was that extreme move. That's now substantial resistance. All above 9 is resistance. Now we're breaking down, making this new weekly low. The chart looks bad. The weekly is crossing over there. It does look bad. So this is my favorite to exploit the weakness of the dollar. I've drawn this downtrend line here, put it in as dash. The reason being is the levels don't match up precisely, but we've definitely got the pattern of lower highs. We've broken the support level, retested it, now broken, and now moving down again, I think. The ADX is telling us that the trend is strengthening, the trend is down. The RSI has turned down again from what I think was a false signal, buy signal here, so showing again weakness, and the MACD is also negative. And so this is my favorite single thing to exploit the weakness of the dollar if you buy into that. So let's go now to the Mexican peso. Of course, the Mexican peso wasn't on my G10 RRG chart because it's not a G10 currency. But here, yes, very bearish chart here. So bearish US dollar, strong Mexican peso. We had this long run up, I remember that, and that was the last time I was really big on the rand and the Mexican peso. Then it ended, and now we're moving down again in the dollar, and the Mexican peso is strengthening once again. So it's about to cross over here, giving the weekly MACD crossing over to negative, and the RSI is also very negative, very weak there. So we're testing a very important support level. So where precisely is the support level? So I have to squeeze this up a bit in order to bring it in. Just put that over there now. And the level, of course, is 1960 here. We're above it at the moment. 1980 is the current price, but we're moving down. It is weak, testing important support. I mean, very important support. It is very weak. That's the RSI is down at the bottom here. That is very weak pattern. And the trend itself is strengthening, the downtrend itself is strengthening. So I think there's a big threat here. Good observation, good to draw our attention to this one. This could be really great. I think it's a bit, it's not premature in the sense that it's already moved a lot, but it's premature to announce that this weekly break has started. It's of course a big support level, and it could hold it and could stop it very easily. It could do that, particularly if we extend this line here onwards. It comes in here, so there's no reason to say it must stop here, but if it does break, it's very negative indeed, and if it's going to hold, it's probably going to be above 1950 that it does hold. So let's watch it very closely, and this could be great to participate in that dollar weakness. But I prefer the Norwegian because it's much clearer where it can go without any resistance in its case. All right, I hope that answers your question, Gregory. May not have been what you wanted to hear, but that's what I feel about it. Now moving to the cryptos, again, let's look at the relative rotation graphs of the cryptos. So we've got Bitcoin, of course, had that savage collapse last week. I mean, it was vicious there on the Biden tax suggestion that they might change the tax structure for Bitcoin profits or cryptocurrency profits, but Bitcoin very much took the bullet on this one here. You can see the charts of the other two, not as bearish or not as bad at all as Bitcoin. Even Bitcoin now doesn't look so bad, but it is now underperforming the US dollar. The other two on the right, we had picked this up 2 weeks ago, that it was better to be in the others than in Bitcoin, and move your money either into Ethereum or Litecoin. Litecoin is marginally to the right of Ethereum, but both of them are to the right of the US dollar, means better than the US dollar, and Bitcoin is worse. The direction is southwest, so that means that they're moving down in terms of positive momentum, and also they're moving left, and so weakening versus the US dollar, which is a hard thing to do, to be weaker than the US dollar, isn't it? So let's move now to, we'll start with Bitcoin. Okay, so here's the Bitcoin weekly chart. So we had the warnings, you know, I kept saying it, but unfortunately we kept making new highs, and I said, but it's slowing up, and this is very much the characteristic of something which is topping out. Now the MACD has crossed the negative. So as a technical analyst, I'm not bullish. I've been bullish of this since September. When we had this breakout here, it didn't cross here, and it's remained bullish. So this is a very significant technical message. The bull market since last September is over, and whether this is a bear market, I don't know yet. But let's have a look at the daily chart. So we had the sorry, let's take that off. We had the bearish divergence here. High, higher high, and again here. We broke down here, and this was a warning to us. And then the RSI came down hard from there. The MACD is negative, the RSI is coming up, which means the trend is strengthening. The trend is now down, not up, so the downtrend is strengthening. In the shorter term, however, we've started Monday with a good session, went down hard, came up after that. Takuri rejection, and this candle itself on its own is bullish, and we've broken up through the 35 level from below. So it looks as though we're going to start with a bounce, but I've got to call it now a counter trend bounce, with the trend now down in it. So I wouldn't be surprised if this doesn't weaken in the next day or two. Moving now to Ethereum. And Ethereum, now look at this chart. You know, this doesn't look as wasn't any really significant contagion at all in this. That was spillover from the unfortunate affairs of Bitcoin. Here we've got still the relentless bull market, the MACD positive and widening, the RSI pointing up, very, very strong market, different chart completely, flirting with its previous highs. The all-time high, intraday high, was made on spike, so that's not serious resistance. This is not strong resistance here on this candle here, and so the high 2551 high, and given the action at the moment and the buy signal getting below 50 is as much as you will often do in a strong bull market. So that was, for me, that was a signal that the pullback was over, and we're steadying up now, and I do think that we will, as Bitcoin perhaps eases back a bit, Ethereum will be moving up and resuming its relentless uptrend, which is so far not been damaged. Now Litecoin, the weekly chart here is still bullish. It's not as Ethereum is sort of purposefully and lots of white candles. Here we've got quite a lot of big significant black candles on the journey up here, but the MACD is positive, and the RSI is at the top part of its range, which is bullish. So it's still looking good, and the pattern of higher lows is intact. But we had that sell-off during the week. It wasn't a one-day event or blast like Bitcoin. It came down. It has been coming down, but now it's come down in the context of a strong bull market. It's come down below 35 and turned up in the RSI. For me, that is significant. And if we can finish this candle like this or better, I think that this would be a very a message that would be strong enough for me that the pullback is complete. We'll come back to test the consolidation of this triangle here. We broke out of it, pulled back to it, extended to new all-time highs, pulled back, had that spike low here on the Bitcoin sell-off, and then have stabilized after that. And I do tend to think that this is the very beginning of a resumption of stability in here. But we've got a completely different message in Bitcoin. It's as if it's a different commodity. So if it was the Biden tax thing, which was on cryptocurrency, it seemed that Bitcoin took the bullet on that. Okay, moving now to the commodities. Was starting with gold. Now the weekly MACD here, I had been bearish on gold for quite a while, but it's all changing now. I think I'm talking about the double bottom here. That's the pullback in between. We'll look at that on the daily chart. We've pulled up here the MACD. Crucially, the weekly MACD is crossing and the RSI is rising here. So the whole technical picture has improved since we retested the consolidation at $1,700 here, this big cigar here, that on the way down we did think might be the place where it would find support. It seems like we have found support with a double bottom pattern. Here's the low, more or less the same low here. Here's the pullback high. If we measure from the pullback high to the two lows, we get a minimum price objective from the double bottom low of 1830 there. So that's if you're not a target, but it's the minimum price objective, which puts us into this consolidation of resistance. The RSI is in the top part of the range here, which is bullish, although we've had those couple of weaker bars. The MACD is positive. The ADX is rising off a low reading, so the trend is now up and it's strengthening. So that's a good message there. So although we've weakened off a little bit, I tend to think that between here and, if necessary, down to 1760, it will stabilize and then push on upwards towards its minimum price objective from the double bottom. It may have to retest the break point first, but the RSI indicates to me that the pullback will probably be weak and we should resume the move up. But there's friction above us here. It's not going to be an easy journey higher. I want to keep an eye on the gold S&P ratio here. So this is gold divided by the S&P. Is it better to be in gold or is it better to be in gold or stocks? And the answer to that has been no. Particularly from this point here back in January, when we broke that uptrend line there, where it was better to be in gold than in stocks, but now better to be in stocks than in gold. And now what I want to point out to you is we're moving quite rapidly towards the all-time low of this, or not the all-time low, but the low of this ratio, the multi-year low, 2018 low of this ratio, testing that. So we could break that, and that means that, really gold's sort of story and love affair people have with gold, probably that will be where people will just give up on gold. And for goodness sake, we've supposed to have inflation, we're supposed to have a weak dollar. I mean, why isn't gold soaring? It's not doing its job at all. I mean, it's steady and we've got the double bottom and the pressure's off, but this should be leading us higher. And the gold silver ratio, so this is gold divided by silver, is remarkably stable. So I'll just show you that on the weekly chart. We broke up out of the long-term downtrend here, and then we broke up, but now it's stabilized. So there's no real story here. Moving to crude oil. We had the breakout of the triangle, powerful breakout, and then we've drifted about halfway back towards the triangle. We've got a lot of support now below here for the chart. The ADX is coming down because of the flatness of the trading activity currently. The RSI is at 50. The MACD is close to crossing, but it hasn't crossed yet. So I wouldn't say that it will cross, but it's gone neutral, Brent crude oil. So come back to support, gone neutral, maybe going to stabilize, maybe going to advance from here. Bit of resistance above, so it'll be hard for it to go. We've got clear resistance levels at 71.37, but you know, it's got no power and no oomph behind it at the moment. Moving now to the stock indices, the US 500. And I just want to point something out about which is best to be in if you wanted to be in one stock index. So clearly the US 500 is looking terrific. The weekly MACD, look at this, is positive. The RSI is still going up here. We have got on this, we've got this doji on the weekly pattern, quite an unusual thing to happen. Does tend to happen at turning points there in the past, and so maybe if we were to break the low of 41.18 is the low of this candle, that would indicate a 2 to 3 week sell-off if it happens. It hasn't happened, but if it were to happen, that would be the message of that. That's that low there. Currently, however, we've got an uptrend which is strong. The ADX is at 27. Just note that ADX is at 27. The RSI is easing back and is giving a negative message, and the MACD on the daily chart is also close to crossing. So we've got a sort of stabilizing message inside this bull trend, which the ADX measures as a bull trend of 27. Let's go to the Ftse next. And the Ftse on the weekly chart is positive on the MACD. We broke out of that triangle, still holding up strongly, broke the top of it, and we note the enormous resistance which comes in above 7,000 here, and we're at just below 7,000. It's struggling to make the journey up, but the RSI is still holding up. It hasn't given up or anything at all, but you know, it's hit its head on a big area of resistance. I must give this a cigar, just to remind us of it here, how important it is. On the daily chart, well, here's the consolidation here, and the ADX on this one is reading 18. So that's very low reading. That's indicating no trend, presence of a trend at all. The MACD has crossed down. The RSI has turned down, and last week on the sell-off of last week, and it's close to neutral. So this is sort of, if you like, mildly bullish. 18 here on the ADX is mildly bullish, as opposed to the US 500, which was bullish. But let's look at the German, the DE30 here. Again, the weekly chart here. Weekly MACD positive, the RSI is high and still holding up high, and we have this pretty great looking bullish move here. I know we've got a black candle there, but I mean, it really is strong here. And then on we've got the rising lows pattern. Everything is constructive here. We're to pull back to 50 and below 50, which is often as much as you get in a strong bull market, which gave me a signal that maybe this reaction is already over, and we're on our way back up again. The MACD is still negative on it, but the ADX, you know, the measure of the strength is at 31. So just to revise on these three markets, the strongest trend, and all of them are in uptrends, but the strongest trend is the German 30 with an ADX of 31. The next is the US 500 with an ADX of 27. And then the weakest uptrend is the the UK 100 with an ADX of 18. And so that's your order of preference amongst these markets. So I continue to prefer the DE30. And then just, I've got 1 more minute left, and I'm going to just revisit a share that we talked about at the beginning, the first week of March. We talked about this one here, and it was because on the weekly chart, this is it's a IHS market. So the symbol is INFO, and we had this crossover here at the beginning of March, and was it the beginning of March or was it earlier? But we started talking about it at the beginning of March here, and it started to move up, and it's now gone stronger and stronger. Now we've got this big white candle here. The ADX, the RSI is pointing upwards because of the strength of the market, and the weekly MACD is very strong. The daily chart, look at this, mostly white candles here, quite normal, hasn't overextended, I don't think, really. The ADX here is reading 36, a terrific reading, so the trend is very strong. On the MACD on the daily chart, it's been positive since the beginning of March. Yeah, that was what triggered the comment on it. And then the RSI is, yes, it's extreme, therefore it's vulnerable when you get a reading of 85. Yes, you know, you could say a sell-off is overdue, but there's no sign of the sell-off as yet. So it doesn't have to happen just because it's got a lot of strength. That doesn't mean it has to weaken, but I wouldn't be surprised if it corrects a bit. But that I would see as an opportunity. This is a very good market, and we picked it well. All right, Dan, do we have any questions?
Yes, we do, Trevor. We do have a couple of requests, actually. The first is a request to take a look at the dollar French franc, Swiss franc. The French franc is longer, and Japan 225. Yeah. And the second request is Japan 225.
Okay, there. Okay, so the remember where it was in the RRG? Let's just remind ourselves where it is on the RRG. So here's the Swiss franc right here on the right, just behind the Norwegian crown, but ahead of the euro. So in terms of preference, as long as the absolute chart is also good, we would like this. So here it is. Let's look at the weekly first, and the dollar has fallen, so that is the Swiss franc rising, and it's coming back to a very important level. Is going back a long time, by the way, 0.9, not just as far back as this line goes, but going back in history. We got the bullish divergence in here, which gave us the alert. The MACD is still positive on a weekly basis. The RSI has pulled back to below 50 in here, and into a big area of support above 90, between 90 and 92, and we're right in the heart of it now at 91. So this is a big area of dollar support, which is being tested, let's put it that way. So what have we got on the daily chart? We've got a very clear downtrend in the dollar. The strength of the trend is 29 on the ADX, which means the trend is strong. The downtrend is strong. The MACD is negative. The RSI is weak. It hasn't come up through 35. It can easily do that because it's very extended on the downside, but it's extended because it is weak. We are coming into this important area of 90. And that, I think, is very important, what we do there. If you go back to very long-term charts, you'll see the multi-year significance of the 90 level, just as it was very important when we broke above it, and we stayed above it now, till we had the bearish divergence, and now we've moved down. But I think, in fact, that is what's going to happen, is that the Swissy is going to move down. That is the Swiss franc steady down to 90. But that is a big level, very difficult level for it to easily move through. You know, we've flirted either side with it for extended periods of time. I'd be very surprised if it didn't do the same again here. So stabilize at 90, but it does look like we're headed for it.
Mm-hmm. And yeah, Trevor, the second request, thank you for that, by the way. The second request was to take a look at Japan 225.
Oh, yes.
Because I know you were a fan of it
Yes, I was, and I am. It's a big long-term message here. So I'm going to go back in this. I'm going to go back 20 years. Is that enough? No, it isn't enough. Let's go back to the beginning of time itself. Let's say 1980. Yeah, because we wanted to bring in this 1990 high here. So this is, I think, where we're headed, you know, in the longer term. I do like this a lot. It has 30,000, big round number, of course, and it's hesitating at that. But personally, I do think it's just a hesitation. There is resistance at 32 ahead of us, and there is now support but at 27,000 if it becomes necessary for it. But I think this is a strong bull market. I don't know if I said strong enough times there, but it's a strong bull market. Many of you weren't born when this happened here. I remember it happening here. This is when we got PE ratios in the 200s, discounting 200 years of earnings on companies. I'm reminded of this because we now see it in Tesla, where we're now discounting 1,000 years of earnings. You know, it's a bit reminiscent, and you'd think that history would not repeat itself and people wouldn't be stupid twice. But yeah, of course, we're stupid continuously there because we're greedy animals. So on the daily chart here, we're consolidating. We've got a range, 28,500 at the bottom of it. The bottom of it is also the top of this range, so I think the support is good. The resistance is light, honestly light, and so I think it's just moving sideways. It's consolidating. It's in a giant bull market, which has got much further to go, I think, but it's just consolidating currently, and I think if it tests the lower end of its range, I think it's likely to hold the lower end of the range. I'm a bull, if you didn't know.
And whilst we're on Japan, Trevor, we have actually had one last request that you might be able to squeeze in, a request to take a look at the euro Japanese yen.
Okay. Well, I always start with the weekly, you know, here to remind ourselves, euro outperforming the Japanese yen, very powerful here. MACD is still positive, coming towards each other, but not crossed over. So don't be premature on that. The RSI on the weekly is high, and we have got a small, not small, but a bearish divergence in here, but draw it in. High, lower high, high, little bit higher high here. So we've lost some power on this move up, but it isn't a move down or anything like that. We've still got this higher lows pattern in the RSI itself. So in a longer term perspective, it's still a bull market. On the daily chart, the ADX has come right back down to 19. And so this is telling us we're flat currently, consolidating currently. In the context, remember, of the weekly MACD still being bullish, we've come up through 50 from below. I don't say a buy signal in the sense of buy it. I mean that it's triggered up a positive signal here by going up through 90. It's up through 50 while the weekly MACD is positive. The MACD itself is still negative, but that's a lagging indicator. So I would like to think that this is stabilizing and is about to resume its uptrend, and I don't see these highs as very, very difficult to break through. And although we're a little bit weaker currently, but I think that we'll be making new highs in this pretty soon and continuing this pattern of rising lows and continuing the bull trend. So it's just stabilizing, and maybe this week we'll see the end of the stabilizing and hopefully see new highs. If we do break the lows here, the low of Friday's low, 130, big round number there, then the next level to test is the 128, 27 sort of 25 level, 128.50 level there would be a downside target. But I tend to think that this is stabilizing prior to pushing ahead further and continuing its trend.
Okay,
and
thank you very much,
breaking of
Trevor.
those highs would be bullish, and that spike high there is not a significant resistance. It's more the body of highs in here at this 130 level. It's the 130 number that matters. No, not 130. So it's higher than 130, isn't it? Yeah, 130.50 level. Okay, Dan.
Okay, yeah, thank you, Trevor. Are we all done?
Yes, I'm done. Yeah.
Thank you
No
very
more
much.
questions. I'm done.
No, thank you, Trevor, for covering all of those points. We had a few extra bits and bobs today to get through. Well, thank you very much for attending, everyone. We'll hope to see you again, same time, same place next week. Don't forget that we'll be posting this to our YouTube channel in an hour or so's time, or maybe a couple of hours time. So if you came later and you want to watch again from the beginning, or if you just like to watch a particular piece again, head over to our channel and don't forget to subscribe and click the bell to get notified. Trevor, anything else to add?
No, I think that you know, we've got this dominated by this strong dollar. Some markets we should be
weak dollar, whoa, weak dollar, surely.
Dollar, sorry. Oh, thank you very much, Dan. Oh, that would have been fatal. Shooting a fence, I think, actually. We're dominated by the weak dollar, and markets we should benefit from that. Oil, gold are, yeah, they're holding steady, but you know, they should be shooting away on the basis of such a strong move down in the dollar. Stock markets are dominating. The German, in my opinion, the best of the bunch. The cryptocurrencies have had a shock led by an almost isolated incident of a slaughter in Bitcoin, and actually the others looking good, and Bitcoin seemingly recovering quite quickly too. But look at this Ethereum now. I think that we're close to making new highs in that. All right. Thank you very much indeed, Dan. Sorry about that, and thanks for picking up my mistake.
No worries. Cheers, Trevor.
Yeah, and thanks everybody. May the trend be with you.
Thanks, Trevor. Bye, everyone.
Bye bye all. Bye bye.
Bye bye.